Bidvest reported flat growth in revenue, while headline earnings did jump 10% to that's 2.1 billion. My word, there's some big numbers. 2.1 billion rand for the half year ended 31st December 2018. Joining me now for more of this is Lindsay Ralphs, who's the CEO of Bidvest, and of course Monday local market man Nassin Nair to help with the heavy lifting. Nassin, good to have you on the show.
Yeah, good to be here.
Mr. Ralphs, good to have you on too. I mean, where do we start? Some numbers, something I missed out. Maybe you could just point some more figures onto it.
Well, we were particularly happy with our set of numbers. You mentioned as you started that the economy is a little frail at the moment, but to come out with 9.6% headline earnings per share growth in this environment, having gone through a technical recession, as we all know, in this particular 6 months, we were delighted with the results, and it's really, proud of Bidvest to be able to come and explain how we managed to do that today.
You know, Lindsay, we've been through many South African Inc. companies come out in the last 2 months, and it's been a really horrible picture. I think when Arnold saw 2.1 billion, he was surprised because we've become accustomed to much smaller numbers.
Almost fell off my chair.
But if you look at the numbers themselves, I mean, this profit growth really derived from very judicious cost management. It wasn't really a top-line revenue-driven growth. It really came through cost savings. What's your sense of the sustainability of those cost savings for the full year 2019 and going into 2020, assuming that the economy takes a little bit longer to recover?
Yeah. I think because of the diversified nature of Bidvest, you do need to analyze the results by division. One can't take a globular number for revenue for Bidvest because we're anything from a bank to an automotive retailer to a service business. We are one of the largest industrial companies in South Africa. We employ about 135,000 people. The revenue was 40 billion, which was a little flat. But if you analyze it by division, you'll see that our services business, which was the largest division we have, grew their revenue by 15% by way of example. Our freight operation also showed a very nice increase in revenue. Automotive, where revenues are very high, margins are low, they took a bit of a smack because of the luxury goods segment and exposure to the consumer market. So I guess for the analysts to really do a good job and analyze Bidvest properly, you need to break it down into its various components.
Just to maybe pick up on that and contrast it with your net financial charges. And isn't this a bit too high at 524 million rand?
Sorry, I didn't quite
get
the question.
Net financial charges, as opposed
to
the
net
reining in all the costs. Isn't this a bit too high at 524 million rand?
No, not at all. If you look at our finance charges, they're flat on the previous year. If you look at our level of debt, it's only 1 times EBITDA. You were surprised at our level of profitability at 2 billion for 6 months. That's at the trading profit level. EBITDA is much higher, and 1 times the level of debt is exceptionally low. And our interest cover is particularly conservative. So if anything, we have enormous scope to expand and to take on more debt onto our balance sheet.
And your cost of funding at 6.6%.
Yeah.
I mean, that's even lower than the repo rate.
Well, we do have some overseas funding.
Okay.
We do have a business in the UK and Ireland where we do borrow at obviously much lower rates, probably 2.2%. So we do take advantage of that. We had a very successful bond raise earlier this year, and I think Bidvest's bond raise was one of the most successful in the country for some time now. So we've got exceptionally attractive rates, much better than we'd had before.
Lindsay, sorry, if I could just pick up on that. If money is getting a bit more expensive, we're seeing a bit, well, the expansionary policy is a bit winding down, QE is a bit coming to an end, ECB, Draghi is making it very clear about that the easy money is about to end. In the mid to long term, how worried are you about the cost of capital, given the fact that what Nassin here is raising, the money was quite cheap, to be honest. If QE is ending, are you worried about that?
I think we have to be, and we continue to be particularly careful about capital allocation. Capital allocation is either made internally through CapEx into projects such as our LPG project, which is well over 1 billion rand. And we look at the returns we're going to get on that invested capital. That's the most important criteria in our life. And our acquisitions that we make, both locally and internationally, once again, we look at the returns that we can potentially get out of that spending of debt in order to make sure that it's beneficial to shareholders. So, you know, interest rates probably will rise a little bit worldwide, I would guess, over a period of time, but not I wouldn't imagine at a rapid rate. So we're still very fortunate in that we've got low levels of debt, and we can definitely grow that.
Lindsay, if I can just draw your attention to some of the troubled children, the automotive and electrical businesses.
Yeah.
I mean, we saw in automotive, Imperial's results came out last week. Very similar story, pressure at the luxury end. We saw ARB results come out as well. You know, electrical is under pressure because of where we find ourselves in GDP and the spending that's taking place. Do you anticipate this to be a structural change that we're seeing in these markets? Or is it just a cyclical change? Do you anticipate that, you know, in 2 to 3 years' time things will recover and you know, we'll be back to normal? And if it's a structural change, how would you address that in terms of your business model?
I think if we can just, again, break it down into the two pieces. Our electrical business supplies the construction and infrastructure businesses in South Africa. There's absolutely no doubt in my mind that post-elections and going forward, South Africa has to invest, both the private sector and the public sector has to invest in infrastructure. I'm a firm optimist, and I really do believe that construction will come back. Any country in the world has to go through those phases. We've gone through a tough phase at the moment, so I would really think that that will come back. Automotive is cyclical and has been cyclical for the last 30 years. I have no doubt people will start buying Mercedes-Benz in 5 years' time again, or 2 years' time, hopefully.
That's good to know.
Let's talk about the Namibian part of the equation. Now, for someone who is looking at this from the outside in, they would look at a country like Namibia, Botswana, they look at the population, per capita might be looking good, but they look at them as relatively smaller markets. But the results are saying something else. What did you make of it so far?
Well, unfortunately, we had a large fishing business in Namibia that you would be familiar with. Unfortunately, the quota was taken away from listed companies in Namibia, so we had no option but to sell that business. What was left is really the core of what we do in South Africa as well. So we did put an offer out to the minorities yesterday, in fact, on Friday, to announce that we're probably going to have to delist that entity. So we're going to take out the minorities and then just bring the Namibian business back into the fold of the South African operation as a regional business. It makes more sense to do that. The business model is better. We can drive down some of the costs. There wasn't any real merit left in listing that entity. So this will be the last time that we report on Bidvest Namibia as a separate company.
Okay. Just, I mean, we have to talk about Adcock. It was a big acquisition done some years ago. There's lots of market commentary about Bidvest getting involved in that. I see the results are improving now. It looks like it's that you guys are getting it in shape. What are the long-term prospects for Adcock? Do you look to exit it? Or will it just become a portfolio investment?
We have gone on record to say we do intend to divest of it. We did want to make sure that we had got it into position where it was saleable. It's doing particularly well these days. They announced their results a week or two back. Yeah. It was also announced publicly that they'd won the biggest portion of the ARV tender for the country, which we were aware of. So I think in both positioning of that company, both its results and its big win in the ARV contract, will position us to get a better price for it. What we have also tried to do is to bring black entrants into that industry, new black entrants into the pharmaceutical industry. We have battled a little bit, but we continue to strive as our ultimate objective of making sure that when we do dispose of it, it ends up in the right hands. It is quite a strategic investment for the country.
Let's talk about that freight investment, 1 billion rand. Yet that's another huge capex, if you ask anyone. Just give me a sense on how this is progressing. You do say in your statement that it is on schedule, but what are the returns, at least if I'm to look forward here? And I mean, breaking even, what dates are we looking at? Then the other issue could be maybe the CEO, SENS was taken by storm with the announcement of 2021. Just walk us through the
Okay, if I can start with the LPG project, which we have announced publicly before. That's about R1 billion LPG build in Richards Bay. The country is desperately short of LPG. And it really is used for heating and cooking in rural communities in many, many parts of the world, particularly in third world type environments. It's much cheaper, much more efficient, and much safer than electricity or any of the other fuels that are currently used. We intend to, that's why it's a major infrastructure investment for us and for the country, to be quite honest, and will help create a new industry in this country. Without LPG, one cannot distribute that type of product around the country. So we're very proud of the fact that we are instigating an initiative that will create big infrastructure spend and create a new industry in this country. With regard to the succession planning, we have always been very careful about planning our succession very carefully, well in advance. Before our unbundling, Brian Joffe, our founder and previous CEO, had myself as the CEO of South Africa, and we had Bernard Burson as the CEO of our food service business, and that was 5 years in the making. So when the unbundling came, I think it was a natural progression and it worked well. So there was an unlocking of shareholder wealth, a substantial unlocking, which was very good for Bidvest and very good for all shareholders. So we're doing it again. We've identified Mpumi Modisa as my successor. She was identified as a huge talent within our group some 4 or 5 years ago, and has been brought to the centre and has been nurtured and brought along, and she's done extremely well at the centre of head office. She's on the main board of Bidvest, she's on the board of Adcock, she's on the board of Business Leaders South Africa with Jabu and all of the guys there. And in 2021 financial year, my time will probably be up by then, which is a good 18 months to 2 years away. And by then we are absolutely confident that a smooth transition would have taken place and Mpumi will be the absolute right candidate to take on the job.